All right, well, we are going to turn our attention now to the Comstock investment team. We've got a 2-for-1 duo today with Matthew and David, father-son combo here. We're going to be turning our attention first to Matthew Kruse, who is the company's president. He also works with his father to farm themselves, and Matthew also spent a stint, it sounds like, in Brazil, working in farming and asset management down there, but worked specifically in agricultural asset management since about 2002, so he definitely knows what he's talking about. He's going to give us an outlook on the commodity markets, as well as his father David, who will join him in just a little while. And folks, again, we'll be opening them up for questions at the end, so if you have any commodity market questions, now's your chance. Matthew, let's turn it over to you.
Thank you, Delaney. My name is Matthew Kruse. I'm the president of Comstock Investments. As Delaney said, I spent a lot of time living in farming in Brazil, and moved down there in 2002, and I like to show people this picture. That's me standing in front of a 20-foot long anaconda, and it's skinned up, and so you can see how big it was. The middle part of the girth was about as big as my leg in width, so it was even scary to look at just with the skin. So I'm going to talk today a little bit about recapping 2020 and talking about South American crop and what we see happening for this coming season. When we sold our Brazilian operation in 2015, and I moved back home and started getting back ingrained into our Iowa farming operation. And when I did that, I started getting more involved with some farmer groups on social media, and I figured might have some good ideas. And there was a young man that asked the question on this social media site to these older farmers that he wanted to get in farming. He said, "How many acres or how much money does it take today to get back into farming?" And I thought, well, that's a good question, and I'm sure these older, established, experienced farmers will definitely have some good information to impart to this young gentleman. And so I thought that their responses were kind of amusing. So the first response to that question, how much money does it take to get into farming today? The first response was $500 trillion. That's what one of the guys said. They also said that it depends how much money your wife will give you. And these are all responses from other farmers to older farmers responding to this young gentleman. It depends how much fun that you want to have. So maybe that means if you're going to buy brand new equipment or old equipment. I don't know. The last response was depends on how much you inherit. So there's probably a little bit of truth to each of those responses, but I thought that was kind of amusing, the responses that they gave to the young guy looking to get into farming. We'll go to the next slide here. So just a brief recap what we do at Comstock. So we're a commodity brokerage, risk management firm. A lot of times farmers think that means that we're Zoltar, the fortune teller, that we can look into the future and tell them exactly what's going to happen. That's not necessarily the case. A year ago, I could not have told you that some guy in central China was going to eat a bat, and that was going to turn the rest of the world into a global pandemic. A lot of society can often look at us as the Gordon Greco types. I know a lot of my friends they look at me like I'm the world's most interesting man with all the commodity trading that we do. But I look at us more as a coach and player type relationship where we're providing guidance to our farmer clients and kind of acting as a coach. And we don't always get it right. A lot of times when it does go right, and we score and we win. Typically, like in sports, I think the players get most of the credit for that, and when they lose, then it's typically the coach's fault. Go to the Next slide. So if we're going to talk about what's going on in commodities and talk about Brazil and where we're looking for growth projections, I think this chart is a really interesting. A lot of people are very aware of what's going on in China and Asia and all the growth there, and this shows you where the population boom is going to be happening in the coming decades. And a lot of people are aware that there's billions of people there in Asia and China, and that's where a lot of the growth is coming from, and it will continue to grow. This is coming from the Food and Agriculture Organization, but what's surprising is that there's a more growth that's going to actually come from Africa. And so you can look out to the year 2100, they're expecting as much or more growth coming from African countries as the Asian countries. And so that's a future growth market. It's maybe a long ways off yet, but there's other countries like China that are seeing that, so they're investing a lot in African countries right now, and so that's where a lot of that growth is going to come from. This gives you a look of where a lot of the soybeans are going through, and so you can see the two main producers there, the United States and Brazil, and then you have Argentina in a distant third place, and it's all going to those Asian countries, principally China, and so those are the big markets that we're fighting for. A lot of the reason for that and why has Brazil been growing so much is just that prices have been more competitive, and a lot of that has to do with the currency, exchange rate, and especially what's been happening in the last couple of years. Now, up until a couple of years ago, the currency in Brazil has been devaluing, and that's making it more cheaper for buyers like China, foreign buyers, to buy that grain, and more competitive than it is in the United States. Before the coronavirus, our dollar had a tendency, the trend was moving up. We're getting more expensive, and that makes our commodities more expensive to foreign buyers. Now, in the last 6 months or so, that's definitely changed, and the dollar's getting cheaper. And so, but that is the main reason that that Brazilian beans have been more competitive and been able to sell their beans on the global stage. And this next chart gives you a little picture of what's been happening with the exchange rate in Brazil. You can see from basically starting in January of 2020, in the next 6 months, the currency in Brazil devalued by about 40%. So in a very short amount of time, it basically means for foreign buyers like China that Brazilian beans suddenly became 40% cheaper. And it also means that the local farmer is getting 40% more in local currency. So in the last couple of years, they've had a very strong, robust economy in their ag sector in Brazil, and so both parties were happy. With Chinese thinking they're getting these cheap beans, and the Brazilians are getting record prices. They've never seen such high prices before. This gives you kind of a picture of really how big and important China is. If we're going to talk about global consumption and demand, who are the buyers out there? And so you can see China represents close to 20% of global population, but they're consuming almost 60% of the global cement this is in the world. And these are pre-COVID numbers, so that I'm sure that probably put a little bit of hiccup in things, but you can see how much they're actually consuming in some of our ag products, and they're consuming 50% all the pork in the world. Next slide will show you how having a little bit of trouble with my clicker. This shows you how important the soybean market is to China. We've talked with these trade wars. Of course, we've said, well, why don't we just try and develop some other relationships with other countries? And we can certainly do that, but it's not that simple. If you add up the next 10 countries, you combine them all together, it still only makes up maybe 50 or 60% of how much China is consuming. And so it ultimately comes down to, unfortunately, that China is so big, they're what's going to move the markets. And so it's really important that we have those trade relationships, and hopefully we can iron those out with phase one and continue to maintain those on into the next presidential administration. So I took this picture. This is driving down the center of Mato Grosso, and it's interesting. If you drove through Iowa and you saw those symbols, that would probably raise a few eyebrows. But if you notice there, those Chinese symbols, the Chinese are getting. They're building their own grain infrastructure. So that COFCO, that's their Chinese state-run grain trading company. And so they're actually building their own trading facilities, buying facilities there in central part of Brazil to source their own grain directly. And so they'll buy it from farmers and they'll ship it all the way back to China. And so it's just kind of unusual, I thought. And so that's why I take that picture while I was driving that one day that I wanted to share this with you, that it'd be something you wouldn't see in the United States, but in central Brazil you see these Chinese symbols on a couple of different grain facilities around where they're actually going out there and sourcing the grain directly. This will give you a neat perspective of how grain production, at least specifically related to soybeans, has changed in the world in the last several decades. You can see here that in the 80s that the U.S. had a pretty strong lead. Brazil was in a distant second at that point. Argentina, now we're getting into the 90s. Argentina is starting to move into third place. And moving on in the 90s, we still have a pretty strong lead here. Now we're getting about to the point when I moved to Brazil, so the U.S. is producing almost twice as much as what was being produced in Brazil at that time. And now here in 03, 04, Brazil's starting to gain. Argentina is growing as well, but not near as much as what Brazil is. They're starting to close that gap as we get into the last decade. Who's going to win? Who's going to make it to the finish line first? Brazil's starting to gain on us. Now we're in the last 5 years. All countries are growing. All countries are expanding. And now we see here in the last couple of years, Brazil has ultimately overtaken us. Now in that 2019-2020 crop, Brazil's crop came in a little bit higher than that, about 126 million metric tons. But you can see here for the last several decades, the U.S. had a very strong lead, but in the last couple of years, Brazil has overtaken us. So Brazil at a glance, you can see that their planted area from last year was about 91 million acres. They produced 126 million metric tons. That was a record crop for them. For this next season that's being planted, and they've started to harvest some of that now. They've planted over 94 million acres, so again, they're expecting another record crop. Now that number, 133 metric tons, that's the last number that the USDA came out with. I think that we'll see that number continue to get a little bit smaller. There's still a ways to go yet. Some forecasters are calling for dry weather in February yet, so that'll have an impact. But that number started at 136, and it could get down as low as 126. But even so, that'll maybe be a little bit disappointment for them, but it's not going to be any big crop failure. So it's still a pretty large crop. Now a lot of that growth is besides the obvious things like Chinese demand. They have a pretty healthy biodiesel market, and that's been growing, and the mandate is between that 10 to 12%. I talked a little bit about the prices there and how they've been experiencing record prices. We're finally getting to the place where we have good prices, and they've been experiencing that for the last 2 or 3 years. And so, assuming they can get a decent yield and they don't get impacted, farmers are making money there, and I'll talk a little bit more about that. Some operating margins could be very positive. This is what we've seen in some of the growth areas. Where is that expansion in Brazil taking place? You can see back in the 70s that it was all pretty much limited to the southern part of Brazil. Those are the traditional growing areas. And then on into 2000, it's expanded northwards into that Mato Grosso area, Goiás, Tocantins, those areas, and it's continuing to move further north. I really like this graph. This is Rabobank that put this graph together. It gives you an idea of what the different ecosystems are in Brazil, and a lot of times people just assume that all of Brazil, the whole country, is the Amazon. That's not necessarily the case. Now, most of that growth that I showed you in that previous chart is all coming from that Cerrado area, which is in that kind of center purplish blue hue there right in the center. That's where most of that growth has come from in the last 20 years. And so a lot of people say, oh, they're all knocking down the rainforest and all that. It's not necessarily the case. Now, a little bit of that is happening, of course. There's always bad actors out there, but Brazil, for the most part, takes it very seriously, a lot of their environmental regulations. And so most of that growth that you're seeing is coming from that right in the center part of that country. That's where my father-in-law farms there in Brazil. That's where we farmed in Brazil when we were there, and but they're starting to encroach upon that Brazilian Amazon biome area, and that's got a lot of people concerned. This just gives you a brief idea of what the land use is made up in Brazil. So, almost 2/3 of the whole country is in some sort of native protected forest area, and that's about 20% in Brazil. And then you can see the agriculture area makes up about 80%, and that's closer to 20% here in the United States. So if it's not coming from the Brazilian Amazon, where is all that growth coming from? A lot of it's coming from pasture. There's some 230 million head of cattle in Brazil. That's more than here in the United States, and so it's coming from areas like this. The main incentive for developing that land is money, of course. Land that sits undeveloped, of course, is valued at one price, and land that's being developed and is producing something, producing a crop, is developed at a much higher price. And so, of course, it takes a lot of money to do that, to develop that land, but that's the main driver for a lot of that growth in Brazil. This just gives you a little bit kind of a before and after picture of what a lot of that looks like. Oops, jumped ahead here. This just gives you another perspective of what we're seeing in the crop sizes and the growth, and so it's obviously we project that it will continue to grow in the uptrend in South America, both in soybean and in corn production. Now, the interesting here that we projected some years out, further ahead, a few years, but they're actually coming in, at least in the soybeans, they're coming in above that right now, and so the 2021 crop, they're projected to come in close to that 130 million metric tons. So it's not just increasing. Unfortunately, the growth rate, I would say, is accelerating, especially with the years that they've had, where they've had record prices and favorable weather. Now, maybe that'll change, but just with the financial dynamics right now, they're doing very well, and so that's continuing to accelerate. This gives you kind of a different picture of where those growth, where most of the production is. So the darker areas mean it's a higher concentration of production. So where I lived at, where we farmed, was in that northeastern area of Bahia. And then you can kind of clearly see where that Mato Grosso region is. And so that's where roughly 40% of the grain output in Brazil is coming from, in that center area. Now that presents another problem for them, and how do you get it out of there? How do you export it? So traditionally these are the road systems. Traditionally they've had to truck it from central Mato Grosso about 1,200 miles all the way to the port in Santos. And that's a long way for them. Now you can see here that they're working on a road to send it all the way to the Amazon, and I got another picture later. I'll show you they've actually finished that road. But that's the challenging thing in Brazil, is the transportation, and so there's heavily congested highways, and I don't think, while it's slowly getting better, it's not something that's going to change anytime soon. This gives you a picture of their railroad system and how it's the darker blue areas are mostly located in the southern part of Brazil, and so they really don't have any good, strong railroad systems yet that are cutting right through those grain production areas. And so, they have a lot of plans to build those, but they've had those same plans, it seems like, for 10 years or more, and nothing yet has materialized. That's a huge advantage that we have over Brazil, is just all our railroad systems, it's not just that we have more railroads, it's that they're more widespread across the United States, and so there's a huge advantage that we have over Brazil yet in our transportation costs. This shows the waterways. Of course, this is another huge advantage that we have over Brazil is the Mississippi that cuts right through our Midwest, our heartland and grain production system, and that's something that they don't have, and so they're working on a road to connect them to the Amazon, and that'll cut some of that cost down a little bit. But unfortunately for them, the Amazon doesn't cut right through that grain production system. This also gives you an image of the grain flow through Brazil. You can see that pink arrow, that's where most of that grain is coming from. Now you can, in heading out of Mato Grosso to that port of Santos, now you can see some of those smaller arrows heading up to the northern parts of Brazil, and that has been steadily growing, and we'll continue to see that growing even further. Now 5-10 years ago, probably it would have been zero. There would have been virtually no grain moving out of those Amazon port regions. Now it's almost as much as a third of grain production in Mato Grosso is moving out of those areas in Brazil. This picture was taken in December of 2019, and essentially it's the Brazilian Army Corps of Engineers, and they're celebrating because they finally finished asphalting that road from the Mato Grosso to the Amazon. So as of December 2019, Brazil finally built an asphalted road leading from their main production areas to the port of Amazon. So you can see the difference from left to right, what that looks like. And so that was a big day for the country of Brazil, and certainly those farmers in that area, that they finally have a good, dependable road there. I wanted to show you this video. This is another video that I took while I was driving in Brazil, and I think it does a good job of giving you an idea of the scope and the size of the farms that are there. And so all this is just a random farm that I found myself driving on one day, and this is just a service road. This isn't a main highway or anything. This is just a service road cutting through the central part of this farm. And we're going about 60 miles per hour. And this is the same farm. It's one operation on both sides. And this is a big advantage that Brazilians have, is just the size of these operations and the volume of scale. And so I wanted to just watch this with me so you could get an idea of how big they are. So this is just one operation, one farm, and we're just driving down the center of it, and we're going about 60 miles per hour. And we'll see how long it takes to get to the other side of this farm. Now, when I was there in January of 2020, right before the pandemic started, we took a group of about 15 Americans down there, and we were in Mato Grosso and looking around, visiting some farms, and the one farm that we visited, of course, the member of our group wanted to understand how much money they were making, what their profitability looked like, and I was translating, and then the Brazilian farmer responded, "Well, I don't know if I want to answer that question. I don't know if I want to tell them the truth." And I was surprised by that. I said, "Well, why do you say that? Why would you want to tell them the truth?" And he says, "Well, I was in the U.S. recently, and I asked the very same question to an American farmer, and I'm pretty sure he lied to me." And I said, "Well, why would you think that? Why do you think he lied to you?" And he said, "Well, based off the numbers the American farmer gave me, they were losing money." And I translated this to the American farmers that were with me, and they kind of laughed, and we said, "Well, I don't think that he lied to you. He's probably just being honest. He's probably telling you the truth." And to the Brazilian farmer, he could not fathom that. He could not understand how they were making so much money, and they had really strong profit margins, and in the United States, that they were losing money. Now, obviously, a lot's changed from last January to this January, thank goodness. But that's the situation that we were in at that time. So we're still driving on the same farm. This is one farm, soybeans, the entire way on both sides. This is probably taken a year and a half ago. And so it was really interesting to see just kind of their point of view. And so I know the American farmers thought that was pretty interesting, that this guy's perspective, that he couldn't fathom that the American farmer was losing money, so he must have been fibbing. We're starting to get there. I can sort of see the other side of the farm now. Here we are. Now we finally reached the other side. So it just kind of gives you a unique perspective of how big these operations are down there. So let's talk a little bit about the corn in Brazil. I know we talk a lot about the beans. Unfortunately, we're going to have to start focusing more on their corn production as well. You know, their last season they produced about 101 million metric tons on 44 million acres. That's increased to 46 million acres. Now their 110 million metric ton corn crop, that's still a projection at this point. I think with some drought that they've been experiencing, we're expecting that to be quite a bit less. They actually have two crops in Brazil, and I'll talk a little bit about this. Two corn crops, a first season and a second season corn crop. The first season had a lot of dry weather, especially in the southern part of Brazil, so I think we're going to see that reduce the projections there. They haven't even really begun their second crop yet, so that gets planted here starting in January and on into February. And so with the slow start into Brazilian planting season, you'll see that corn crop get pushed back, and it's going to be at a lot higher risk for potential drought. You can see here when some of the other growth factors for corn in Brazil. Now, when I first moved there in Brazil and started planting, a 90 bushel per acre corn crop was considered average. That was normal. And with a lot of the seed genetics, it's made a huge improvement in yield potential. And so it's gotten to the point where with a full first season summer corn crop in Brazil, it's brought the average up to closer to at least the yield potential up to 180 bushels per acre. That's kind of what we shot for. But it just made a huge difference. It just seemed like the crop potential doubled in the size and the amount of time that I was there. You could see here what's happening in Brazilian corn production. This is just in the last 20 years, so it's basically quadrupled in size and doubled in size in the time that I was there. I talked about how there's essentially two crops of corn in Brazil. You have your first crop and your second crop. Your second crop they refer to it as a safrinha, which basically means little crop, because it used to be the smaller of the two. And you can see with the darker line there that it's overtaken the first crop. So the quote-unquote smaller crop has now become the larger of the two crops. And so that first crop has stayed relatively stagnant. So what happened, what changed was as the soybean area moved north and they planted more areas, that first crop of soybeans then would get rotated with corn. And so essentially as the soybean crop is grown, that second crop of corn has grown with it. And that'll continue to happen. That's not going to change, but you can see here how much difference that's made. And this chart is all put together by FC Stone, and this points out back in the 90s how much of the corn market, export market that Brazil and the United States had. So the United States had 75% of that global market in 1990, and by 2016. That's down to, I can barely see that, it's about less than 40%. That's how much that's changed in that amount of time. And in Brazil, which didn't have anything back then, now is closer to 20%. And, unfortunately, that's been a long-term trend. I don't know that that's going to change anytime soon, but that's essentially what's been happening with the global market. This shows you where that first crop of corn is in Brazil. You can see in that more southern part and eastern part of Brazil where that's happening, and that makes up roughly a third of the overall production. And so it's not the larger part. So most of the corn production is now based off that second crop. So here you can see how that changes. There's the second season crop. I'll go back. You can see the first season, that's where that growth is, and so then it's really all coming from that second part, the second season crop is coming from there in Mato Grosso. This gives you another example of what the growth projections are for corn production in Brazil and how much that's increased. And you can see Argentina has increased quite a bit as well over the years, but still it's Brazil is coming in now. They're at the point where they're producing more than 4 billion bushels. Now that's still quite a ways from what we're producing 15 billion, but the point is that they have a lot of growth potential there yet to come. Now, this is the other interesting thing that's going on in Brazil. You're looking at essentially the first large-scale pure corn ethanol plant in Brazil. And ironically, it was started and funded by an American group with partners in Brazil. And so that's based right there in central Mato Grosso. And, as the corn production continues to grow and expand, it doesn't have a lot of ways to go. And so up until the last couple of years, the historic corn price in Mato Grosso was about $2. It was some of the cheapest corn in the world. Well, what can you do with cheap corn like that? And so they're essentially starting making out of ethanol. And so now you're seeing you're in the infancy of next stage of ethanol production in Brazil, and it's going to start competing with our ethanol production. So it's not quite that simple. Traditionally most of the Brazilian ethanol has been made from sugarcane. And 10 years ago, when I would tell them, our sugarcane or ethanol in the United States is made from corn, they'd kind of roll their eyes at me and say, "Oh no, sugarcane is way better." But there's a lot of disadvantages to raising sugarcane and producing ethanol from the sugarcane. I mean, it's a massive investment. Now it's a big investment for corn ethanol, but it's even much greater for sugarcane, because they have to source a lot of the land around them, so the actual mills themselves will either buy or rent land around them. Now, I don't think that would go over very well if a lot of the corn ethanol plants here started buying or renting land around them to source their corn. But that's essentially the case in Brazil that you're seeing there. The other disadvantage is that you cannot store that sugarcane. It has to be processed, within 3 days of being cut, and so that's the main reason that they have to source that sugarcane and keep it so close by, where obviously you can store corn for a large period of time. This gives you an idea of what some of those projections are. There's other ethanol plants being built as we speak in Brazil. There's already 10 plants. Some of those are flex plants. They're going back and forth they're doing sugarcane half the year and they're doing corn ethanol the other half of the year. There's several plants under construction, and there's probably dozens that are in the blueprint stage that not all of them will get built. But you can kind of see here that where the trend is heading. Now, not all of those plants are going to get built, as I said. The disadvantage that they have in Brazil is lack of liquidity, and so when our ethanol industry went through its boom, there was a lot of banks willing to lend. There's a lot of money moving into that, and so it's not the same thing. A lot of this is being funded by investment groups and not necessarily farmers. And so, but the point is that you're going to see that it's already doubling in size here in the last couple years, and I think you're going to see that trend continue. The other interesting thing here, when you drive through these areas of Mato Grosso, you see these trees, and these Mato Grosso, these are eucalyptus trees, and they're planted right next to corn and soybean areas, and essentially that's what's fueling those corn ethanol plants. They don't have natural gas pipelines that they can just connect to, and so they're actually raising their own fuel. It's a very cumbersome, a lot of work to that, but there's thousands of acres of these trees being planted. This is just some pictures of our group that visited in January. We had people from all over the Midwest, one group from Arkansas that went down there. But one thing that's very clear is that Brazil they're very intent on becoming the world's new food supplier, and they're very competitive with us. Now that doesn't mean that there aren't some challenges that they've faced. That we have definitely some advantages in transportations and things like that, but they have their own economic and political challenges. They've had a president impeached here a few years ago, although there's a lot of that going around. They have other bureaucratic issues. I mean, the bureaucracy really slows things down. Things move very slowly there. The lack of liquidity in their financial system is not near as developed as ours, and so it's just a lot harder to get things done. They don't have a lot of the risk management tools that we have here. Thank goodness. I mean, that we have a good crop insurance system that puts a floor on a lot of our risks, and of course, using a lot of the hedging tools and strategies that we have, they don't have there. And so a lot of farms are operating with a lot higher risk, with unable to use any hedging tools, operating without any insurance, and so they're essentially self-insured, I suppose, and so that puts them at a lot greater risk. So I want to thank you. I'll hand it over to David Kruse now, and I think we'll take some questions later on.
While we're transitioning here to get David up on the stage, again, a big thank you to Matthew. Folks, you can send questions to the chat function in Zoom. Matthew's obviously got a firsthand perspective of Brazilian agriculture, so that's pretty great to have him available as a resource today. You can also, again, text in the number 605-951-0276. That's a normal texting number. We're monitoring that here on the back end. Heather and the team are monitoring that, so if you have questions, do feel free to text in that number. But quick introduction here for David Kruse of CommStock Investments. He is the co-founder and chairman. He's been a broker since 1985, so he's worked many years in the industry. He's also a farmer himself, farms with Matthew and the family, and he's also the reporter, if you will, for the Comstock report. So I'll turn it over to you, David.
Thank you very much. I'm going to start out quick with I'm going to flash my life before your eyes in about 3 slides. This picture was a much younger me, and it was taken when I was a student at South Dakota State University. So I do have some ties to the state. My wife graduated from USD. And so although we had tuition reciprocity with Iowa at that time. This is the next stage of my life. That's when I got my real education. I was, I think, president of the Clay County Cattlemen at this time, and I went through the Ag Depression of the 1980s, which was about as good of a learning experience in the real world as that you could possibly get at that time. This is me more what it looks like today, and I do have to admit on a day like today that it's nice not to be out there trying to thaw out some livestock waters or something after the cold winter blast that we just experienced. Starting out with some slides here, begin on what has been the major event of 2020 and into 2021 is, of course, the COVID pandemic. I think we all think maybe it could have been handled better in retrospect, and we're all hoping and praying that with the vaccines that are being administered now, that we're getting near the peak of this particular pandemic, and that by spring and summer that things will look a whole lot better than what they do now. Yeah, one of the things that we talked about, they talk about this lockdown when we began the first wave of this and how that we were going to shut down. Well, part of the problem is that we never really did. They track these cell phones and the movement and such, and barely half the country shut down. And the following result is that this virus spread basically throughout the country, and really gave this pandemic a boost. I guess the part that really bothers me most about our response to the pandemic, and I think we needed a much more aggressive federal response, was the record that we have relative to other countries. I go back to World War II, and when Japan, Pearl Harbor, when they attacked us, the whole country, picked up, and the Japanese, some of them even saw it coming, that they awakened a sleeping giant. And that giant basically came and slew them, so to speak, in the victory that we had in World War II. And I look at the response to what we've seen, this time. And just this past week, we've had a couple of days when the death toll of the United States was over 4,000. Well, the Japanese have not lost that many people yet for the entire pandemic. They have to be looking at the United States and wondering what happened to since the past generations and how we respond to a crisis and our success in doing so. And this has been a very competitive disadvantage to us economically, as most Asian countries. It was the same in Korea. We lose more people in one day than they've lost in the entire pandemic. That's not a good story. Unfortunately, this is the picture, I think, that maybe some would think personifies what our pandemic looks like here. I guess this is one role that I think that agriculture can be proud of. I think we did step up, and we did secure our food supply chain. The USDA has done a good job with its food box program. And that we've kept, although there's the statistics show that there's a lot of people that still don't get enough food from what they would like to have. At the same time, we've stepped up and delivered to the American public in general, and we're continuing to do so. We've created a nutrition system in this country that has really acted as a good buffer underneath this threat that we've all been experiencing. Looking at how it's impacted our economy and jobs, that there's, we look at the previous presidents and what the trends were for we've had recessions, great recessions, a lot of things would happen. But if you look at the pandemic, nothing is infected in our lack of proper response to it, as with all this other history that we've gone through in our lifetimes. And we're still something like 9.9 million jobs short of where we were when we started. And I know that the Federal Reserve is very concerned that it's going to take a long time to get back and get this growth trend back that we really did have, prior to this. The other concern that I have is this is a chart of it's a little busy, I guess, as one of the other presenters explained one of his charts, but that one lighter blue peak was our federal debt back at World War II. Well, we've, of course, soared on past that, and it goes right off the chart. I mean, our new president is now, at least his plan is for another $1.9 trillion. I think it was old Illinois Senator Everett Dirksen that's, and he said in government that, a billion here, a billion there, and pretty soon it adds up to real money. Well, now a billion doesn't mean nothing. It's a trillion here and a trillion there. And it used to be that when they would increase their spending by those billions back in Dirksen's day, that we would increase taxes so that consumers felt it, or that the community felt it, so that when the government was spending money, there was a source from it. It was real cash that somebody was putting up. Not so today. These trillions that are being spent now are essentially just sent as a note to the Federal Reserve, where somebody there sits on a computer and punches a few keys, and it makes the money. It finances it. And so we don't feel it right now. It's a surreal situation that we can be accumulating this much massive debt, and that for all intent and purpose, the American public is not really cognizant to it. It's not feeling it. It's feeling the benefit because all the checks are flowing. It's a false situation that, I don't know how long it takes until there's a day of reckoning, but there will be one. There ultimately has to be. This is a temporary situation. It's not something that can be sustained and sustained and sustained. This is a chart that I wish I had a little laser pointer on, but it's not a very good one for these circumstances here today. But up in the upper right-hand side of it, what it's basically showing is a flat progressive inflation rate. And then the sharp up red line, I think that's the money supply and money velocity. Well, all this money is now sloshing into our economy, and it's obviously found the stock market, and it's now starting to find commodities too. And I think that's going to, ultimately, whenever a major nation has accumulated a debt, as this country is doing, someone down the line thinks that debt's hard to pay back, and so therefore they're going to do it with cheaper money, cheaper currency. And of course, that short term for that is inflation. Again, here we can see this term, the stock market. It's been, for one reason or another, more recently, all the the monetary stimulus that's been put into it by the Federal Reserve. It's been in an upward trend. Although recently commodities, they've been still deflating from the highs that we had early in this decade, and flattened out. And we build a base now in commodities, and it is my belief, at least, that the investment money is now starting to find commodities. It's certainly found the grain markets at this point in time, and I think that high-priced grain eventually creates high-priced livestock, and so when the fund investors are ready, they will move into that sector next. There we go. We did have some good things happen relative to trade the last 4 years. We had an extremely proficient U.S. trade representative, Bob Zoellick. He was one of the best people in the administration. And he did work hard, and he got us some corrections, I guess is how I would describe them, to the Kruse, the Korean trade agreement. The USMCA was a positive restructuring. We've made one with the U.S. and Japan, although maybe there could have been a better route there. But he also left us at least with phase one of the trade deal with China. It's kind of interesting how really, if you analyze the Trump trade policy relative to China and the objectives that they were trying to get, which was, of course, bring jobs back to the United States, that did not happen. And it did not bring down our trade deficit, something only like 12%, and that's already starting to move back in the other direction. The big picture things, it really was not successful in delivering, but in the small stuff, at least on the ag side, I think that we did get some benefit from it. Looking at phase one, that did leave some tariffs in place, but they were also supposed to buy $80 billion in manufacturing, $50 it is in energy, $40 billion in ag products, $25 billion in ag services. Where are they in complying with phase one? Well, this chart showed that it's a tall row to hoe. It's a very high objective to achieve. It did say, though, that it says good luck doubling U.S. exports to China. Well, I will point out that if we sell them $8 soybeans or we sell them $16 soybeans, meeting that trade agreement is much easier with the higher priced product. You essentially doubled it that way. We'll see how that happens with other commodities as we go along. Where they're at right now is they were supposed to record it in total by $159 billion worth of U.S. goods. They're at 82. On the ag side, this was through November. They're at 67% of their goal. In machinery or manufacturing purchases, they were at 52%. And the energy is where they came up short, and that was really at 31%. They may pick up a little more of that in this last month of the year. It was a 2-year agreement, and we do have to say that the trends are going in the right direction. I would hope that maybe that is still a good signal for ethanol. They have not came in and bought ethanol, and I don't know why they haven't. And it would seem like if they're really serious about meeting this trade agreement, that would have to be part of what happens next. I advanced this slide. This slide, I think I've showed at every presentation Outlook meeting that I've been at in the last probably 20 years. It essentially is the hypothetical corn market. You start out from a base period where you have some low prices, and those low prices build demand. We were essentially back in the 80s, we produced corn below the cost of production for a long time and lived off of government subsidies. Well, all the industries were making money off of that cheap corn. And then they began to expand. And then we got something called the ethanol industry. And that's where the liftoff comes from. And then you throw in a drought and you get a spike up to $8 corn. That lasts for a relatively short period of time because farmers are very good at responding to profitability. And then you get the slide back down. Then you go back into another base building program. For where then you begin to move again. This time we've only been 3 or 4 years probably into the base building. Doesn't seem quite as long, but what we're really seeing though is this shift in world market in China coming about it, and so it's the next reason, so to speak, to maybe get an early start, I guess is the way I would describe it, in an inflation cycle as well to the next upturn in commodity prices. Put my glasses on so I can see that out there. I guess the number that I really wanted to point out on this particular chart as far as the yield, what we saw was an unusual late season collapse in the production. This was my 47th crop, and we talk about, the previous speaker talked about analog years. The one that it matched up to me was 1976. When my wife and I went on a family trip in August. When we left, the corn was green, and when we came home a little over a week later, it was burnt, it was fired halfway up the stalk. And I have not seen such a late season collapse in moisture conditions and stuff, anything comparative until this year like that. It seems like that's what it matched. I remembered back in 1976 that the response to that was that although our yields were down, that the price did respond. And I thought to myself that, hey, I think that this is going to adjust. The revenues per acre oftentimes don't change that as much as actually the yields and the prices. And that's it kind of, I think, has proven out to be true. A much smaller reduction on the side of the soybeans. Soybeans are a drought crop, of course, and so there was a little less impact from that. But I know that in our particular area, and I'm sure you experienced some of it too, is that it was a pretty remarkable late season collapse as far as yield potential. Looking at current projections for corn in Brazil, I think that's 108 was where the USDA was at, and then the soybeans, they're 133. For Argentina, corn are 47.5, and for soybeans, 48. The USDA does not lead, with their forecasts. In other words, that their main growing season is still in February and March. So therefore, the USDA, from what they're seeing right now, they think there might be some decline, but they aren't going to go all in. They didn't go all in our crop until this month, until January, as to what really happened here. They are always sort of following it. And so my suggestion, and from what I see for the conditions, is that we're going to see all these numbers drop yet. We may see a 128 for what Brazil soybeans are, and also that the corn numbers are going to come down, further too, from that aspect of it. Looking at the balance sheets and the changes that have been made there, they did reduce the previous year's crop and took $325 million off of the 2020 corn production. They, at the same time, they compensated some on the demand side, looking for $50 million to come off of feed usage and $100 million each to come off of both the ethanol and the export production. That left them with a 1.562 on that one. I guess in my own estimation, that I think the export number is all wrong, and that it will be another 200 to 400 million bushel higher rather than a decline, and that we will see the U.S. corn carryover projection much closer to 1.2 before they were done. We're not all in yet, I don't believe, on what we're seeing. I'm going to skip the world ending stocks on the top, and I want to go to the China imports. This is where the story kind of gets interesting. I was supposed to be here giving an outlook presentation, last year, and that presentation at that time would have been very bearish. Looking ahead into 2020, we had some very negative balance sheets, and we had high profiles of subsoil moisture, really good start to the season, and we were quite bearish, and we were hedged at that point as a case of that. About August, I had a couple of phone calls from some hedge fund managers who have major Chinese clients, and they told me that China was going to buy over 20, maybe 24 million metric tons of corn, and that ultimately they would buy probably 20 million from the United States. And the USDA was at 7. And as time went on, month after month, they confirmed to me that what China was going to do, and the USDA, they didn't change their number until actually, I think it was like December or whatever before they really started to move it up. And now, at this case, they're up to 17.5 million metric ton, and they're still short. On the case of the soybeans, they're at 100, and that's probably going to be 102 or 103. And so what the market is balancing today with their current rally and their current prices is a situation where they're looking at more Brazilian production of corn and beans than I think that we're going to realize, and they're looking at less Chinese demand than I think is going to be realized. And this thing is still a powder keg if those projections come true. These hedge fund managers also were expressing at the time the consequences, lies, truth, and consequences of what this failure of the USDA to tell the American farmer what was going to happen with Chinese demand. That essentially what it did is it allowed China to buy these crops, this last crop, at much lower prices. It benefited end users, it benefited commercials, and it allowed the Chinese to steal the crop. So that now today, when we're seeing this sharp up increase in prices, a lot of farmers are not participating. They've sold almost all their soybeans, and they've also sold the bulk of their corn. And so now when the landlord comes and says, hey, you're getting $5 corn and $14 beans, gosh, my cash rent should go up. Well, the problem is that the farmer didn't get that because he didn't have the information in real time that he should have had. Our report did that. We flipped we said in August, I said change horses, cover all hedges, move along at that point in time. I bought, there was a gap up, I think on the 25th, I might get the day right. And that was when I moved in. I owned December corn at $3.46, and I bought November beans, I think it was at $9.18. I ended up rolling those contracts, rolled the December corn to March, and rolled the soybeans to January and then to March, and I'm still long from those initial contracts. That's the most per contract profit I've ever engaged in over the 47 years that I've been farming and doing this at this time. It was a very extremely important call, and it was not helped by USDA processes and reports, and they were too darn slow. And it cost farmers a whole lot of money, and it is China and the end users that benefited as a result of that. We'll see if this works. Now, this is a little R-rated. I didn't produce it, but it does get to the point. Oops, it didn't go. That's supposed to be a little movie thing. Isn't going to happen? Well, I'm sorry, a little technical glitch there. Basically it was them at the USDA telling us how that they are coming up with their poor reports. And so I'm disappointed that it didn't work, but maybe we'll try it later. Whoops, I think we're fighting between us. There we go. Here's the corn chart at this time. We've had a multi-year base, as you can see, and we've now broken out the top side of it. Where's corn prices going to go? I have no idea. But I believe that South American crops are overstated. I believe that Chinese demand is understated. And I totally agree with the previous presenter on the forecast for this spring weather. We'll get into that just a little bit here later. And so we're going to have a huge fight for acreage. And then if we may have a drought market as we fight this over in March yet. Currently, my plans are, there's one technical target here at 577. I'm kind of tending to sell about, I also told all of our subscribers to bin the crop, to sell nothing. And by the way, I take my own advice when I do that. My crops are in the bin. And I haven't sold. I've gotten the entire advance. I will look at probably selling 25% of what I have in the bin here when if we get near that 577. I'll look at another 25% in March when we get into the acreage situation. I'll get another 25% in the spring because I think that we're going to be planting in dust. I hope the old adage comes true where a plant in the dust and the grain bins will bust. I hope this La Nina doesn't last so long as to totally decimate this crop. I'm going to bring it up right now, too, because I'm thinking of it. I also follow Dr. Elwin Taylor. And he's been, I think he's been a tremendous job. I required my son to take his course at Iowa State when he was there. And one of the things he's been predicting here is that you'll see the drought of the century in this decade. He uses 2025 as he says, give or take a year. But that's what he thinks is going to happen here. So we have to be prepared for that type of a situation too. You go back to the 1930s when you had some multi-year drought situations, and maybe that's just getting started. As I said, where the corn market goes, I don't know. We haven't seen rationing yet. Ultimately, we will have to, in all my belief, but when we get down to pipeline supply here. We look at the price of, where there's still the cheapest corn in the world. It may be 5-something here today, but actually you can add 50 cents to the red line, and Chinese corn's up at $11.50. And also in Brazil, they don't have any for export yet. They've got to get their next crop planted. They got to get that safrinha crop in and get the production. And so we're in a extremely good spot, I guess, relative to taking advantage of the world demand in both our relative prices and where it's coming from. Our ethanol industry is probably the first that will experience some rationing. They've gone through the COVID situation where if you don't, nobody drives cars, you don't have gasoline to blend into. And that's going to continue to be a problem and so it's going to be hinged mostly to the COVID situation. By spring, summer, we start to get more toward herd immunity and such, and people can actually feel confident enough to respond to that, that's when you'll start to see the fuel demand increase again, and then we can have some structures. But otherwise, when we hit a level here that it's all they can produce, they're negative margins right now, and if you see the black line over there, how stocks have surged again. And so there's no shortage of ethanol at this point in time. They're the most vulnerable to immediate there. I wanted to show you this corn basis map. This is off of DTN, just to give you an idea of the regional differences right now that are occurring in the corn market. If you're in the Panhandle of Texas, right now they're paying $1.20 over Chicago border trade there. You get into Kansas and it's like 60, 65. Get up here, well, at my home in Royal, you're looking at 20, 25 under. And so, one of the things that's going to happen is that if I'm a cattle feeder and I choice to where I want to feed cattle, it's not going to be Texas. I'm going to start placing cattle in Nebraska or something closer, Alaska, South Dakota, Iowa, if I can, where the better priced feed is at this point in time. And so we're going to see some change there as well. But pretty dramatic differences in basis as far as corn is concerned now from where it's at. Looking at soybeans, one of the things I think could happen is that we will import beans this summer from somewhere, and the USDA did increase their imports by 20 million bushel to 35 in this particular report. I think what was happening in Brazil and in their corn situation was that they so heavily sold out their old crop that they had to import to meet their needs to reach new crop. Same thing's going to happen in soybeans here, would be my belief, is that China and whoever's going to come in and take them out. Now, they made some modest changes to the crush and to exports, and they're coming up with 140. That 140 will be gone in a flash. If what I think happens in Brazil and occurs, and as we look at our own crop projections here, we could be sitting at nothing for a carryover, and we're going to need to import something probably late summer. There's also going to be a premium for early harvested crops this next year, both corn and soybeans. There'll be an early harvest premium as they look to get a supply as fast and as hard as they can. We've blown out resistance in the soybean market. As I look at the situation and what could still happen, as we get further into the year, and somebody asked me where soybean prices are going, and I said, I don't have any idea. But in the case of soybeans, though, I think that there's that continuation high was 1789. I think that high could be exceeded. I'm not predicting that it will be, but I think that the potential possibility for that certainly exists with the fundamentals that we have today. I haven't sold one soybean that I produced last year. They're in the bin, and I don't even have a marketing plan for them yet. As far as what I'm waiting to see. There's too much that has to happen here yet, and they're going to need absolutely every bean in these bins. They're an extremely precious a commodity. Might be again that you go into the bar and you ask for a beer and then you lay down 8 soybeans and that takes care of it. I don't know. This is the NOPA crush setting records. Actually, last month's crush was at 183, which would extend that green line on the next month up even a little farther. We've got tremendous. Our soy meal exports were tremendous last week, and so the world is coming after it in whatever form that it is, as far as the soy is concerned. Also China, their hog herd is now recovering. They put tremendous investment into rebuilding their African swine fever losses. And so now the situation is that they're almost back with their feed production where they were before African swine fever. And if you add in their poultry expansion and some others, their feed demand is phenomenal as far as China is concerned. That's why they have all these American exports coming at them, and their market is still going higher, $11.50. It has ultimately what should happen is there should be arbitrage. They buy enough corn from us and import it that it brings down their domestic price. Hasn't even happened yet. We haven't seen it. The dollar is also a major factor. You know, if we're going to accumulate this massive debt in this country, you know, maybe we're going to pay it back with cheaper dollars. It used to be that the rest of the world looked upon the United States as being this, where our institutions were strong, and that they're, you know, that type of risk to investing money, America was the best place in the world to go. I think that we're in the process of ruining that reputation with what we've been seeing, you know, with recent events in this country that have been happening in Washington. I know I was telling a story that my wife, she was on a mission trip where actually she was teaching English to some girls in Tanzania through our Lutheran church. And, you know, one of the questions, she got lots of questions about America. And one of the questions was, you know, Mrs. Kruse, in America, when they have an election, it says, is there a peaceful transition of power? Because in our country, there's not. She says, it's just always bad when one party wins over the other party, and what happens with it, and everything breaks down. And of course, at that time, this was 3-4 years ago, my wife says, no, in the United States, we have a peaceful transition of power and on the elections. And then, well, you know, now we're Tanzania, it would appear to me, and heading in that direction. And that's something that we should be very careful about. You know, I think Matthew might have shown a chart of the Brazilian real. You know, last year, when the real was at its weakest, his father-in-law had a record soybean crop. And they were just stunned in that they could have this, they had the most production they've ever had and the highest price ever. I mean, it was an absolute knockout home run for them down there, and they're actually pretty close to that for about 2 years. And so, of course, what do? They're expanding. Matthew said their acres were up 6%, but then they get a La Nina. And that La Nina has a tendency to moderate South American production this year. And so in spite of the increase in acreage, it's not going to flow through with as much increase in production as many had expected. I got just a few weather slides. This is a slide I thought was interesting. It showed the derecho last year. You know, what we were seeing is some unique wind phenomenons. You know, just a week or two ago, they recorded the highest pressure system in Mongolia that has ever been seen in history. And when that came across, the wave height was also a record off Alaska at 53.8 feet. That was the wave height. And then we come across into the United States, and we're getting winds out in the Rockies of 85 miles an hour. And we were supposed to be 40 to 65 with this particular storm that just went through. And so the derecho is not a one-time event. And it seems to me that it's been repeating with a lot of high wind situations. Again, this is a little more detailed chart showing where the wind impact hit. Fortunately, where we were, just a little bit far north of it, that we didn't get the worst of it, but we got all the drought that we wanted up there for that late season decline. I think I might repeat a chart or two from the previous presenter. You know, this was the situation, I think, when we started in April as far as the moisture condition in the Corn Belt. And then this is, well, I got to hit it again. This is August and what happened. And so they're pretty dramatic situation and change as far as this late season collapse is the way I describe it. And it particularly hit the corn on corn up in our region. There's going to be a lot less corn on corn planted this next year as a result of that. So I guess here we ought to take it a little further. This was as of December. And so the August wasn't the worst of it. It's gotten worse from that aspect of it. You know, that's the same drought map or a similar one to what he showed. It is the La Nina impact. Dr. Elwyn Taylor suggests that La Ninas will produce a 70% chance of a below trend line yield in the Corn Belt for corn. Now, the trick is that we've got a La Nina here in January, and that's a good time to have one. We don't grow crops here in January. It is impacting South America. And so it's how long this La Nina will last into the next growing season. Well, the previous presenter also suggested that it's going to last in the summer, which would be devastating if that occurred. It would go fit what Taylor said, 70% decline in trendline yield. Imagine looking at the balance sheets and the world situation, what something like that would do. To markets and such. I almost can't imagine it. It's nuclear as to what would happen from that situation. Looking at Brazil, typically in El Niño, the Mato Grosso region produces well. The drought situations typically happen in northeast Brazil, which is in Bahia, maybe southern Brazil and into Argentina. And if you look at the second chart there, that's a little unusual. And it's been that way since the beginning, that the Mato Grosso has been treated roughly by this La Nina. They are having record moisture deficits in the Mato Grosso. Never before have they started out and maintained such moisture deficits as what they are right now. Their crop still primarily is made in February and March. I know the climatologist that we use, his forecast went dry for February. And if that happens again, it's going to be more significant. Typically what happens is that Brazil sort of nets out between dry areas and wet areas, and the loss in South America comes from Argentina. Well, if anything, this seems to be a more extreme La Nina pattern down there at this point. And so we'll see what the ultimate impact ends up being. Whoops, somehow or another, it really liked that push. Okay. Again, here's soil moisture deficits and the impact that they are down there. And they've been getting some rains here and there. Somebody getting a rain, but not enough. And as you look ahead here, now they're getting into more critical time frames, they're not going into that in very good stead, and there's absolutely no sign that we can see of this La Nina weakening. We follow what's called the Southern Oscillation Index. And in that indication, we're up over like 11, and it only takes positive 8 to be in a La Nina situation, and the daily indicators are still strong. And so, well, time will tell, but it doesn't look to be like a good outlook for them at this time. They're going to need a save, so to speak. This is looking at the rest of the world and their moisture situations, and another place in the world where they're having drought is in Russia. And so Putin is now worried about inflation in Russia, food price inflation. And now he is significantly increasing the duties on exports, essentially putting on a pro facto ban. And so then again, our wheat market responded to that Friday. And we're the wheat supplier of a residual supplier in the world. And so we're gonna benefit from situations like that too. So it just seems like worldwide right now, there are more supportive factors to these markets as we move into this year than there are negative ones. We will not see highs until we get the bullish fundamentals recognized. USDA is behind the 8 ball on that, and then that the market stops responding to bullish news. So far, I don't think either of those two criteria have been met. And so it's going to be an interesting year for as we go forward for pricing. There we go. I guess I can join you now for questions, right? All right.
Absolutely. Please do come join us, David. We are going to get them set up here for questions. We've gotten quite a few in already, so thank you for sending those. Again, you can send those in the chat box function in Zoom, or the number to text directly is 605-951-0276. All right, gentlemen, the hard part's over, right? Now we just have.
I don't know. This
Great.
might be the hard part. I don't know.
Hard part.
You're probably a tough questioner.
Well, we've gotten quite a few questions about South American production. I think that's been the big topic here as of late when it comes to weather and also markets. So a couple questions here. Matthew, you talked a lot about the transition in acres that we've seen here over the last couple of decades. What is your outlook when it comes to Brazilian production moving forward? I think you said it was about 45 million acres that are producing right now for corn and soybeans each. Are they able to get to levels like the United States and see some 80 or 90 million acres converted to farmable ground?
I think eventually, but it's many years from now. I mean, every year it's been pretty consistent. I mean, they've been looking at roughly probably a 3, 4, 5% growth rate in acres every year, and so I think you'll continue to see that. So it's not going to happen overnight, but I mean, if you look at a long trend, it's probably more of a problem for your children than for you at this point. It's 20 years out, but at the same time, you're going to see consumption increase as well, and so offset some of that. But yeah, I think over the next 20 years, I think they could get to that point.
And when you were showing that video of going through the farming fields that just never ended, what is the average size of a Brazilian or Argentinian farm?
Oh, it depends. Where I farmed in the state of Bahia, it seemed like everybody had 10,000 acres. Now, there were guys that had less than that, maybe a few thousand acres. But you get into Mato Grosso, which is the more well-known state, and there's larger farms, and it seems like everybody has 20 or 30,000 acres. But in Bahia, where I farmed, we farmed 20,000 acres. My next door neighbor farmed 200,000 acres, and he was probably the largest farmer in our state, and so he was my next door neighbor. So there's always somebody bigger, I guess. But
wow, vastly larger farm sizes than what we're used to here, maybe in the United States. It sounds like.
Yeah.
What about infrastructure? You talked a little bit about, and you shared that picture of them finishing up tarring the roads, since obviously infrastructure is a lot different down there. Do they need to see, or how much new infrastructure have you seen or is being put into Brazil and Argentina right now, and how much more is there left to go?
Well, I think they've made most of their progress on a lot of the ports, because that's where a lot of their bottlenecks were at. And so I talked about how, 10 years ago, 100% of their grain from Mato Grosso was going all the way out of those ports in the southern part of Santos. And now you're seeing port infrastructure increase in the Amazon regions. And so that's where they've made most of their progress. In terms of railroads or waterway infrastructure, virtually zero, it seems like. They've been talking about it for a long time, but I don't know what happens. The politicians come out and say, "Oh, we got this railroad is approved. It's going to happen. It's going to be done in 2 years," and then 2 years go by and nothing happens. But they've made some progress. If you look over a 10 or 20-year window, they've made some progress on their highways, and that's also important. We talked about that. Highway making it to the Amazon. I mean, that was 20 years in the making. I mean, and they didn't just throw that up overnight either, but it took them 20 years to basically get from Mato Grosso all the way up to the Amazon, and they finally got it done. Now, will it take another 20 years for them to widen that road? And that's something they're starting on now. That's just a 2-lane highway. And so they're starting to widen that road and make it 4-lane, and gosh, you wouldn't think it would take them 20 years to do that, to widen it, but you never know in Brazil. You don't want to plan on it until you're actually driving down it. So.
And I'll open this question up to both of you then. I'm sure you can both weigh in. But when you look at U.S. infrastructure, are we moving product competitively, or do we need to see some sort of overhaul done nationwide or maybe regionally to start to be able to compete on a better wide scale?
Well, I guess I can take that question. In general, that we do have a very competitive, transportation infrastructure. I mean, part of that's the basic structure of the country. That we're one of the few places that's got a river that placed up the center of the best producing land in the world. That gives us an outlet to the Gulf, and then at the same time, we've got excellent rail traffic now that goes to the Pacific Northwest. And so that has been our primary advantage, has been with Brazil, is the cost in moving product from the farm to the world market. And because that logistics is there. Our problem and what we've been at risk from is that for 20, 30 years, we've been talking about the obsolescence of the locks and dams in the Mississippi River, and nobody has done any actual thing about it. They just talk. Well, it sounds like, actually in one of the most recent bills, they did refigure some of the formulas for the money that goes into the funds to do that sort of work, and it's supposed to add $1 billion over the next decade, and so we need to maintain what we have. I don't know that if there's any great additional infrastructure that we need to add to, but so they're going to constantly, at their slow pace, become a little more competitive to us. One more little point of view from what Matthew had in his presentation about, Brazil feeding the world. The American farmer all my life has always said that we feed the world. Actually, the mindset now down there, and they have come back on that. You guys say, you're going to feed the world? No, we are. That's what they're telling us.
That's interesting. Very interesting to hear. I know that you both are also a little bit of political junkies. It sounds like you both have degrees in political science, so I think this question is very fitting to ask to both of you as well. With the transition here quickly approaching to the Biden administration, do you think that they're going to make any moves, or what should be done to compete with the Trans-Pacific Partnership?
Yes, in my opinion, that was a lost opportunity that created an opportunity for China. China has been actually making some entries into joining that trade group. And although we went with the singular partners, I guess, with Kruse and U.S.-Japanese agreement, there's still a whole lot more that would have been brought into it with that particular trade agreement. And in actuality, we didn't get any better deals out of the one-on-one agreements than we would have had with TPP for agriculture. But we would have, of course, included Vietnam and a whole bunch of other countries in it had we went that route. And so I think that was a lost opportunity as far as we were concerned. I would be surprised if it gets resurrected, but time will tell.
The one thing I would just add to that, it's not like those agreements didn't happen. They kept on going with all the other countries, just stayed in it and just kept going without the United States. And so we're the ones that kind of took our ball and went home. And so hopefully it's something that we can get back into. And I don't know if people realize how reliant we are on these export markets, and it's just every year you see that trend growing, that the market's growing, which is a good thing, but when it also makes us more reliant on those markets as well over time.
Let's talk a little bit more about exports, because as we know, we've had much better prices as of lately in corn and soybeans. We've also seen, as you pointed out, David, increased demand, or Chinese demand, that needs to continue under that Phase 1 trade deal. Will higher prices stifle demand? And then also we had a question here from Keith Alverson that said, when does demand start getting rationed in corn and soybeans?
That's the job of the market. It's got to find the answer to that question. And the way it does so is it does it in two ways. It will move to levels where somebody says, I can't make this work anymore, and so therefore I'm going to shut down an ethanol plant, or I'm at least going to sell my cattle 20 pounds lighter, or somebody overseas decides that it's gotten too expensive coming from the United States.
But on the other hand, too, is it provides the incentive. The U.S. farmers always responded to this incentive to produce. And so they're going to have almost every crop, well, every crop would probably be profitable this next year. Last year, no crop was. And so a pretty dramatic difference. And so I think that we will respond with acres as much as we can. But again, Brazil and South America responded with acres. But then weather was the impact. Well, that again happened here in the United States. We'll come with acres, but will weather allow us to really have an impact on production?
Matthew, anything to add there?
Yeah, it's hard to say when the rationing will begin. I don't think we're quite there yet in the corn, but we're a lot closer in the soybeans. If we're at 140 million bushels, I would think if we get closer to 100 or below that it would probably start happening pretty soon. But I think you have a little bit more time yet in the corn before we reach that point.
They got to buy my beans yet.
Yeah. We don't know when that's going to be. So when it starts to ration, then he'll.
I'll tell you when it happens, I guess.
Yeah.
It's hard to predict the future, but there are signals that help with that. David, you mentioned acres. And I think that battle is already ensuing now with acreage numbers here for 2021. What's your outlook? Do you both think that we're going to see more corn acres or corn acres stealing from soybean or vice versa?
I guess I think that the big push is going to be in soybean acres. Again, I think that there was some bad experience this past year in much of the Corn Belt and was partly a response for the late season collapse in yield due to the corn on corn. And I think there'll be a move more toward rotation. Now, I'm at the same time, I don't think corn acres are going to back up. I think that obviously $5 corn, it's going to be a prize fight of the century here is what it would look to me like what's going to happen. I think we'll end up with more of both, and so, for quite a while here, these marginal acres that we have, they've been going into dormancy. Some people, I think they'll be looking at, gosh, at this price, I can make it work. So
I think a lot of it's regional, like you talk about, I think you're right, in Iowa you're going to see a lot more soybean acres, but we have office in Missouri, and a lot of our clients there say, they like the rotation, they stick to the rotation. It's going to be really hard to get them to change that. And we have an office in Arkansas, and those guys say, we'll chase the market. We're willing to do corn on corn or do bean on beans. They're going to do whatever the market tells them to do. So it's probably a little bit regional across the United States. Everybody's a little different, but in Iowa, I'd say it's probably going to be more beans, just partly because they've been doing corn on corn for quite a while, at least on our farm. So
yeah, I didn't plant any soybeans in 2018 and 2019 because I didn't like $8 beans, and I thought I could do better with corn. And then only last year I did start to plant beans again because I had the idea that things were going to change. And I actually wish I'd have planted more. So.
Yeah, you're in a unique position where you get to forecast the market and also help make your decisions on the farm.
That's right.
Yeah. Mm-hmm. Well, a final question for each of you. You talked about a lot of fundamental events going on globally, but what's your perspective? What's your outlook for corn and soybeans here in 2021? We're at front month contracts at least are at $5 plus and $14 plus, but new crop in both of those two commodities aren't quite at those levels. What's your outlook here for 2021?
Well, I think that the old crop has to move to levels where we see the rationing occur. And as Matt suggested, I don't think that's happened yet. As far as the new crop, I'm also a long new crop. I've been long that for a period of time here too. And because we're going to go into this year with such a weather risk, in my opinion. And if we got to the situation where there's a weather market here this summer, old crop is cheap. It's going to be looking at levels where the old crop expired, and new crop's going to say, hey, how close can we get to those? And under those circumstances. And so I guess I'm bullish on both at this point in time, and have not recommended any new crop sales either.
Yeah, I would point out that anytime you get profitable prices, it's never a bad thing to let a little bit go and kind of manage your risk. But I think that he's right that I don't think these prices are going to head lower anytime soon. I think we have time here yet that for a lot of things he talked about in his presentation, I think China is going to continue to buy more. We're going to export some more. And so I think there's reasons to remain positive here. But at the same time, it's not a bad idea anytime you want to lock in a profitable price. And so I'd start slow though and wouldn't get too crazy. But it's always a good thing to lock in profitable prices.
Absolutely. And I know we have a few more questions in the Zoom chat. We're not going to get to those right now. We'll work on answering those questions in the Zoom for you guys later. Matthew and David, thank you both so much for joining.
Thank you.
Appreciate being here.